Good morning, everyone. Welcome to today's market snapshot. Today is the 19th of July, 2023. Today I'm going to be taking you through the snapshot. My name is Nobert, the education partner for FX Pesa here in Kampala. Of course, our markets are looking really good. We have been having quite a number of movements. As you know, last week we had the CPI reading for the US, which has provided quite a bit of movement in the market. The market seems to be having a risk-on reaction into the start of the week. And of course, we also know that bank earnings or US earnings have kicked off. We have quite a number of companies that have released the earnings, most especially the US banks. Of course, one of the other key market movers recently has been the release of potential AI products by Microsoft, which is of course one of the big reasons why we're having the US indices, especially the Dow, having that kind of reaction. The other key update, of course, on the market radar is also the NASDAQ rebalancing. NASDAQ is going to do rebalancing of its stocks, especially the top mega cap stocks. It's going to reduce the percentage of weight of these stocks. That's of course the reason for that is that they want to reduce the impact of these big stocks on the NASDAQ. Yeah. As of this morning, what we have on the economic calendar, as you see, we've had disinflation seems to be taking place in most of the countries. Of course, we had the US Secretary to the Treasury, Janet Yellen, speaking yesterday in an interview with Bloomberg, and she indicated that the reason for the likelihood that there's not going to be a recession in the US is because of disinflation and also because of a strong labor market. That's one of the reasons why we're having a potential likelihood that recession may not take place. However, the Fed minutes that we had released for June indicated to us, morning Charlie, indicated to us that the US is likely to undergo a mild recession. So we are yet to find out whether the Fed still stands with its indication of a mild recession, or we are not going to have, if they're going to switch over and say that a recession is not likely to happen. So what we are seeing of now, and of course, as you see, the reason why we had a slump early this morning on the pound was because CPI in the UK has declined. It has declined from about 8.7% to about 7.9%. Morning, Charlie. Morning, Joseph. That, of course, is an indication that inflation might be starting to reduce in most of these countries. New Zealand, of course, has also indicated a decline in inflation, CPI. As we go over to later in US session, we have quite a number of events that are going to be released. We have building permits. Building permits, of course, that of course is bullish for USD if we have an increase in the building permits. Then, of course, the other one on the key event we also have later today is the crude oil inventories. As you know, of course, US oil, one of the reasons why, Redemptor, you're most welcome. For US oil, one of the reasons why we have been having oil rising is because of a policy by the OPEC, especially United Arab Emirates. They want to have a cut in production of about 1.4 million barrels per day. However, UAE has indicated that it's not going to participate in the cuts, but we are already seeing morning Jason. We're already seeing the reaction of the cut in the oil production, in the oil price, as you will see. Okay, so just a few other things that I just want to share with you here. Okay, so we have something here by Goldman Sachs, as you can see. So Goldman Sachs has a report here, and they just put together how recession is likely to trend in the US. The likelihoods, it's just scenarios. It has put together scenarios, which of course are important for us as traders to see. So the talk in the market last year, and of course, also the beginning of at the beginning of this year was recession. But now we are moving into a stage where now, Kelvin, you're most welcome. Good morning. Morning, Paken, you're most welcome. We are now moving away from them speaking about recession to now disinflation. So as you know, for inflation in the US, it was at 3%, and now it's dropping. Okay, Drip, you're saying I'm not audible. I don't know whether it's my end or your end. Okay, because things seem to be doing okay here. No, okay, so yeah, so as you see here, the issue now is recession. Recession bets seem to be dropping, and now, of course, we are having disinflation on the horizon. And of course, one of the reasons why we are having the dollar taking a hit is because of a cut in bets of likely hawkishness by the Fed, and it's likely also that the dollar is already pricing in a potential end of a rate hike cycle sometime next year. So we'll see what happens. Of course, when Fed meets next week, they're going to have two meetings next week, starting with Monday, and then of course into Tuesday, and then we'll have the Fed conference being chaired by Powell. That will be on Wednesday. Yeah. So now the market sentiment is switching away from inflation and recession now to disinflation, because inflation seems to be dropping lower. Yesterday, we also had CPI coming out for Canada, and it also came in. It also came in lower. Yeah. So Redemptor, you're confirming my audibility. Yeah. So Drip, I think just check on your mic on whatever device you're using. It's likely might be on your end. Yeah. So Apollo, you're saying is gold and BTC related and correlated? Are they not used for similar function? If so, why did we have such diverging trends? Prices yesterday, gold went up, BTC went down. Yeah. So of course, correlation is not always at 100% positive correlation. Yeah. So it's likely that the correlation will keep changing here and there. And of course, the other thing that you have to keep into consideration is that with especially with correlation is that one of the reasons also why gold went up yesterday was because hello, hello, what's happening with this audio now? Hello, guys. Hello. I hope you guys can hear me now. I think it should be better now, the audio. Yeah. Yeah, the audio should be better now. It looks like it's responding on my end. Okay. So let's now check the chats. Let's see. Yes, it's back. Yes, I've just checked. I think there was a pause in the mic there. Okay, so yes, about gold. Gold, of course, the reason why gold is moved up yesterday was because of relative dollar weakness. The other one also, yes, Rafi, yes, yeah. So the other one is also because of yes, Apollo, I'm on to you. The other reason, of course, is because of market forces of demand and supply. There have been bets that the gold may start a new bull run, so we need to wait and see what happens. The other one could be is that maybe market players might be looking for higher premium points for gold and maybe increasing their bets for higher gold going into Q2 and then maybe to end the year with a lower gold. So that could be one of the reasons why. Yes, Owen, thank you. Yes, I've just had the mic check. There was a bit of an issue with the mic. My apologies for that. Yeah. Yeah. So of course, we also have to see what happens. The other one is dollar weakness. I think I've alluded to that. If dollar weakness continues, and also once we have a drop in rate hike bets by the Fed, then it might provide gold some medium term to short term strength. Yeah, so that's what we have to look out for. Okay, so the other one, of course, let's see. CNY, why is CNY losing against dollar? Why dollar is already weak? Yeah, so CNY, as you know, China seems to be also taking on a lot of easing. It's increasing a lot of liquidity in the markets, which is, of course, putting a lot of downside pressure on the Chinese yuan. That's the reason why you're having the relative yuan weakness. Yeah, so that's in response to you, Vandy, on CNY. So we're going to go through the charts quickly. We're going to start with GBP USD. So for GBP USD, average target for the banks for Q3, Q4 was about $1.30, which has been achieved. And of course, one of the reasons why we had GPUSD having that slump it had today was because of inflation data. So that's the reason why we're having that movement down, as you're seeing on GPUSD. And of course, as you can see, we had an ascending wedge, which of course, we had a price breaking lower below the wedge, and that has been maintained. However, we had a new resistance point here, which then turned into lower highs, as you can see. And I still anticipate that we might have still some bullish momentum on the pound. The other thing, however, though, is inflation, of course, with declining the way it declined, might put a bit of short-term pressure on the pound. And as you know, GPUSD had a really impulsive move from CPI. So it's essentially just maybe ranging here. But key levels to watch, of course, we have to see whether it breaks above this descending trend line. If we see a break of above this descending trend line, then in a short term, we might see then a potential retest of that level right there, which we saw before a CPI of today. That's regarding the pound. Trading view DXY, I'm going to go to it just a moment. Yeah, that's so the pound the average target for the banks has been achieved of 1.30 or $1.30. So we have to wait and see what happens with it going forward. Crossing over to NASDAQ. NASDAQ, of course, the two drivers for NASDAQ, one of them is the Apple Q2 earnings, which are going to come out on the 3rd of August. If we have Q2 earnings coming out strong for Apple, then NASDAQ definitely is going to have it's most probably going to take out its all-time high of 16,200. There is nothing that is stopping the tech stocks from moving higher. As of now, the momentum to the upside is very strong. NASDAQ is up roughly almost 40% year to date, which of course is a strong indication that we might not be in a bear market for the tech stocks. And of course, the other reason why we are having this really impulsive move every single time Nasdaq pulls back. We have a demand just kicking in, is because tech companies are looking fairly strong, basing on the earnings, and we are yet to see what happens later. The other one, of course, is regarding rebalancing. As you know, the weightings for the tech companies, especially the mega cap stocks, are going to be reduced. So if we have a reduction in those percentages of their weights, then of course it might have a bit of a medium-term to short-term weakness for the Nasdaq. However, if Apple Q2 earnings come out strong, then we might see Nasdaq moving higher. So as you can see, this is the Ichimoku cloud I have on my chart, and the Ichimoku cloud indicates that we are having strong upside momentum. As you can see, there was a crossover right below, which was the beginning of this signal for a buy. And then we had a crossover right at this point above the cloud right here. So which indicates to you that there is still potential for Nasdaq to keep moving higher within this ascending channel right here. I'm going to get to DXY. I'll go to the chart for DXY Apollo. So now this is Dow. Yesterday we had earnings, very, very strong earnings we had very strong earnings for Morgan Stanley and Bank of America. And also last week, the reason why we saw Dow have a really impulsive move from Friday, which was, I think, somewhere around here, was because of really strong bank earnings. That's the reason why we are having a really, really strong upside movement for this particular index here. So the more the banks keep releasing their earnings, the more we might see, some upside movement. So as you can see, the higher highs are really evident on this index. You can see right here, as well as also right here. And you can see that the bullish, the bearish order blocks and the breaker blocks are quite many on this particular index, indicating that upside momentum is still very strong for this particular index. And we are not quite far from breaking our all-time high. If upside momentum continues, definitely key levels to watch, of course, for now, for today, 35,478, which was last achieved last year, the 21st of April last year is when we last achieved this level. So this is the key level to watch for Dow. It's most probably aiming to take out this level on the daily, as you can see there. GBP USD, I'm just from covering it, Edwin. We said for GBP USD, we're essentially looking out for short-term consolidation on it, since the average target for the banks was already achieved. That was at $1.30. So we might have a medium-term consolidation for it. Yeah, so for GBP JPY, we are going to have upside momentum for it. This is because recently the governor for the Bank of Japan indicated that they are still going to continue with their yield curve control, which is to keep the Japanese yen under pressure as they continue to ease inflation beyond 2%. So earlier, of course, there was a report which Barclays Securities released indicating that the Bank of Japan may pull back on its easing, but that's not likely to happen. And it's because of that we might have JPY pairs, having continuous movement to the upside. Going to Euro USD. Euro USD, of course, the target for Q4 for the banks is $1.17. As of now, Euro USD has been able to achieve $1.12. So it's likely that we might have upside momentum continuing. As you can see right here for Euro USD, we had the ascending triangle here, which broke very well above, and we had a move to the upside. And as you can see even here, there's still an ascending triangle, which is almost in formation here. So it is likely that if we have a retest of this descending trend line here, okay, and a break above it, then definitely Euro USD is going to be looking for new levels up there. But I feel like since the banks have already achieved or are getting closer to their target of $1.17, we might have short-term weakness for the Euro USD, even when DXY is having also relative weakness. And of course, as you know, we had a really big impulsive move. So it's likely that that we might keep ranging here on this particular pair. USD JPY, let me just rush there to handle USD JPY. How comes that yesterday gold rallied and the same time DXY rallied too? Yeah, so DXY had a bit of a relief rally. Just to speak a bit about correlations, guys, not all the time correlations at 100%. You'll have times when gold and DXY will move in tandem. This is because of market forces and also because of technical levels. If psychological levels have been achieved on some pairs, then definitely you'll have some bit of mispricing happening for those particular assets. So it does not mean that all the time gold has to rally when DXY is also also selling. Yeah, so DXY of course was benefiting from subdued weakness, so it had to add a bit of a rally upwards. USD JPY, of course, as we know, the Bank of Japan has now come out clearly through their governor to speak that they are going to continue with their ultra loose policy. So of course, in the medium term, of course, USD JPY definitely, we saw that we'd had a bit of a downtrend right here, and we might continue in this downtrend. That is because of dollar weakness. That if the Japanese yen manages to squeeze out a bit of strength, then definitely we will see it in a medium term, at least continuing back to these levels here that it last saw in this descending level that we saw here. But as of now, we know that the Bank of Japan is continuing with its easing, and it's only until maybe Fed rate hike bets increase. If Fed rate hike bets increase, then definitely the dollar will have a bit of strength. The only reason why the dollar is weak, just to make it clear, it's because the Fed rate hike bets are reducing. The markets are pricing in potential for the Fed to continue to end its rate hike cycle, and that will only now become more clearer when we have the Fed meeting next week, rather the Fed conference next week. So as you can see here, USD JPY seems to be moving in an upward trajectory, and I don't know whether this is potential for it to break above this level, but as you can see, we're having higher highs happening on USD JPY. So if we get a break above this ascending level, then definitely USD JPY is going to be headed up here. If we fail to break this ascending trend line here, then we might continue downwards. But as you know, Bank of Japan is not fighting Japanese strength. It's definitely going to leave it to keep weakening. So with that, USD JPY will benefit to the upside. Brian Kamau, this is the 15-minute time frame on USD JPY. Yeah. So with that, guys, I would just want to cross over quickly to DXY. I just want us to see what's happening with DXY. For DXY, as I alluded to earlier, we had said essentially with it, it has currently broken below its descending trend line on the recession, on the regression channel. So if we continue having downside movement below that regression channel, then it might also impact DXY downwards even further. So let's just wait and see what happens there. I just want to go quickly to DXY so that we can check it out quickly. Just a moment. Okay, so Apollo, you're saying rate hike cycle also affects the Canadian dollar and all these things. Just a moment. Yeah, so the Bank of Canada, of course, they are also having rate hikes at the moment, and the reason why they were having those rate hikes was so that they could fight inflation. So of course, we are yet to hear from the other banks, and of course, Fed is going to kickstart that next week. As of now, for the Reserve Bank of New Zealand, as well as the Bank of England, they have indicated they are continuing with their rate hike cycle. Same thing also for the Federal Reserve, but we have to wait for their meetings to see what happens regarding their stance on some of those things. Yeah. And again, now this is the DXY. So for DXY, as you can see there, we topped up, we topped at 114. That was in around September, October last year. And as of now, you can see that DXY is indecent, okay? It wants to retest levels that it last saw before the Russia-Ukraine crisis. Just speak a bit about Russia-Ukraine. As you know very well, Russia-Ukraine, the Russia-Ukraine crisis seems to still a developing story, but it seems to have eased out a lot. And that's why the market seems to be putting that behind it. And that's why we are having that DXY most probably wants to revisit levels that it was last at before we had the Russia-Ukraine crisis. So downwards of 97, 90, 95, that's where we are likely headed. Yeah, the chart is coming to you, Apollo, just a moment. When you say banks achieved their targets on GPUSD, what do you mean and exactly how do you know? Yeah, so for Apollo, usually banks will indicate through their reports. They usually have market outlooks that they circulate through different websites. When these outlooks, usually the banks will always be able to indicate to you where they see a particular currency going within a certain quarter. Yeah, so if they indicate, for instance, now like for Euro USD, the average target for most of the banks in Europe have been indicating that they hope to see Euro USD reaching levels in okay, just a moment, let me just share that. Levels, hoping to see that they reach some of these levels in December 2023. So for Euro USD, they released some of these reports in Q1, and they were indicating that they are going to reach these levels in Q3, Q4. So you can check out Forex Street. That's a good website for you to get some of these stories. You can also check the bank's individual websites because they indicate, the bank's individual websites indicate when indicate when they hope to see some of these levels being achieved. Yeah, so you can always check for those on the websites. Yeah. Okay, share one link. One of them is here. Okay, that's a good one for you. You can check that one out. Okay, so that's what DXY is looking like as of now. You can see that it's aiming for levels that it last saw, levels that we last saw in 2022 before the Russia-Ukraine crisis. Yeah, so we might have some of these levels being achieved again. As you can see here, this is April 2022. So most probably DXY is heading for this level right here. If it fails to break these support zones around here, because there are quite a number. Okay, there are quite a number of levels here that it needs to break before we have even a lower movement. Okay. Levels like here, we also have this point right here, which it is attempted to break. And even now, DXY seems to be in a relief rally of some kind. So we have to wait and see what happens. And yeah, so I think that's pretty much it. This week is relatively a quiet week on the market radar for news. So we just have to see what happens with key zones and see what happens eventually with most of these assets. Yeah. So Apollo, you're saying when you say banks, I think I've handled that. Rate hike cycles polls also affect too. Yeah, so for each of those particular currencies, we need to wait for the individual bank meetings for the governors to meet and provide their say on where they anticipate most of these currencies or where they see the economy headed to. Yeah, so that's pretty much it. Team US as of now, as you can see, the US 10-year is also down 1.1%. That's also one of the reasons why you're having gold having a good time to the upside. Yeah, so things are looking up for the risk on assets right now, and we wait and see what happens eventually for these particular currency pairs as well as assets. So I think that's it for today. I will see you guys next week again, and I wish you guys happy trading, trade safe, and I'll see you guys next week. Yeah, actually, I think I'm going to see you guys on Friday. I will be handling the snapshot for Friday because Samson won't be available. So I'll see you guys again on Friday for the snapshot on Friday. Yeah. So with that, I wish to end here, and I wish you guys happy trading. Justin, you're saying check GPP JPY. So I was just on GPP JPY. You're taking me back there. So GPP JPY, let me just go there quickly. Yeah, so for JPY, the latest we have on it, the Bank of Japan governor indicated that they are going to keep with their ultra loose program for easing. That, of course, is going to provide limited strength to the JPY. And if we see this strength, essentially, if we see that JPY does not manage to get enough strength to the upside, then definitely we are definitely going to take out this level right here, which we last saw on 7th of June 2023. Yeah, so that is currently what's happening for JPY. But you can see also here that we are currently in a descending trend of some kind right here. So if we fail to break that the upper descending trend line, then price is most definitely going to continue back lower here. So it depends on what happens over the next few trading sessions and days. Yeah. All right. That's it for today. I wish you guys a great day and happy trading, and I'll see you guys on Friday. Yeah. Okay, so Apollo, the website, just a moment. Yes, Apollo, I think you need to try the website again because it seems to be working quite well. Maybe it's because I didn't add the www dot, but you should still be able to go to it. So just try that link right there. That should take you to Pound Sterling Live. So Pound Sterling Live has quite a number of information that you'd be able to. Yeah. Thanks, Matt. Thanks, Katasimu. I will see you guys on Friday. Have a great day and happy trading.